You know how it is you're trying to get a clear picture of something important, understand the real story behind the headlines.
Yeah.
But often you're just faced with this mountain of information. That's exactly why we do the deep dive.
Mm-hmm.
Today, we're cutting through that noise to look at Agnico Eagle's first quarter 2025 results using their own news release.
Right.
Our mission,
Oh,
to figure out how they're doing, really, and what it means going forward.
exactly. Think of this as your faster path to getting it. If you're an investor watching AEM, or maybe you work in mining, or you're just interested in the economy,
Right.
we're here to pull out the critical stuff. Key achievements, financial health, their big projects. We'll bring the essential understanding into focus for you.
Right, because you might have all sorts of things coming at you, news, analysis, whatever. We want to give you the signal and all that static.
Precisely.
So our main source here is Agnico Eagle's Q1 earnings report.
Hmm.
They trade as AEM on the NYSE and TSX. And this report, it's packed, right? Financials, operations, sustainability, future stuff.
It really is.
So let's jump in. Where should we start to get the big picture?
Well, the logical place is their headline. Excellent start to the year. Strong results, both operating and financial.
Okay.
And the numbers, they really back that up. Record quarterly adjusted net income, $770 million. That's 1.53 cents per share.
Wow. Record income.
Yeah, and what's interesting is this came even though their actual gold production was down just a tiny bit.
Huh.
It really suggests, they're benefiting a lot from the higher gold price and maybe shows how efficient they are.
A record even with slightly lower volume that definitely catches your eye.
It does. And then there's the free cash flow.
Yeah.
Really strong.
Okay.
In Q1, they generated $594 million, or 1.1 cents per share.
Right.
But if you look at it, before changes in non-cash working capital, money tied up in inventory, receivables, that sort of thing,
Mm-hmm.
that number jumps to $759 million, 1.51 cents per share, gives you a clearer view of the cash just pouring out of the operations.
Okay, so a serious amount of cash coming in.
Mm-hmm.
What does that do for them right away?
Well, short term, it massively strengthens their balance sheet, gives them a lot of flexibility.
Flexibility for what exactly?
For growth investments, for returning money to shareholders,
Yes.
Options.
Got it. So let's dig into that balance sheet a bit more. What else stands out financially?
Well, their cash position went up nicely by $212 million.
Okay.
So they're sitting on $138 million in cash now.
Solid.
But maybe even bigger news is how close they are to having zero net debt.
Really?
Yeah, net debt is down to just $5 million. Total debt is $1,143 million. But with all that cash, they're almost there. It's a remarkably strong position.
Absolutely. I remember we talked about their debt before, and
Yeah.
it was definitely higher not that long ago. Getting this close to zero net debt is a big shift.
It really is.
And it sounds like credit rating agencies are noticing.
They are. Moody's revised their outlook to positive from stable back in February, and they kept the rating at *1. That positive outlook, it signals growing confidence in their financial stability, their ability to handle their debts. It suggests Moody's expects them to keep performing well.
So strong numbers all around. Now, the report also mentioned shareholder returns. How are they doing that?
Two main ways. First, they declared a quarterly dividend, $0.40 per share.
Okay, direct return.
Exactly. And second, they were buying back their own shares in Q1.
Ah, the share buybacks.
Yep. They bought back about 488,000 shares for $50 million. Average price was around $102.44. That was under their NCIB normal course issuer bid.
Right. The NCIB allows them to buy shares on the open market.
Precisely. It can boost earnings per share, support the stock price if they think it's undervalued.
And buybacks are often seen as a sign of confidence from the company itself, right?
Totally. Fewer shares outstanding means each one represents a bigger piece of the earnings pie.
Makes sense.
And what's really telling here is they intend to renew that NCIB for another year. And get this, they might increase the limit to $1 billion.
$1 billion. Wow.
Yeah, that strongly suggests they're very confident about the future and really committed to returning capital to shareholders.
Okay, yeah, the potential $1 billion buyback definitely says something.
Mm.
Now, let's shift gears a bit. Agnico Eagle also put out their 2024 sustainability report. That's super important these days. What were the highlights there?
Right, it's their 16th annual report, so they've been doing this a while. Shows a commitment,
True.
The theme this year is global approach, regional focus. Basically, staying connected locally even as they operate globally.
Okay, makes sense. What specific things stood out?
Well, they're continuing their towards zero accidents, safety push, stronger leadership, managing risks, training, standard, but important stuff.
Safety first.
And decarbonization. Big focus there. Energy efficiency, new tech, renewables. They're still among the industry leaders for low greenhouse gas intensity.
Intensity meaning emissions per ounce of gold.
Exactly. They produced 0.38 tons of CO2 equivalent per ounce in 2024. Keeping that low is key.
Definitely. What about community engagement?
Yeah, that's a really big piece for them. In 2024, they launched their first Reconciliation Action Plan.
A first for a Canadian mining company, the report said.
That's right. It outlines how they plan to build relationships with Indigenous communities. Big step.
Seems like it.
Plus, they donated about $11 million locally and spent roughly $1.9 billion on local goods and services.
Wow, $1.9 billion.
Yeah, and get this, $1 billion of that went to Indigenous businesses. Those are serious numbers for local economic impact.
Those really are substantial figures. Shows a real commitment.
Absolutely. And they also stressed they're sticking to global standards like towards sustainable mining, TSM, and the responsible gold mining principles, RGMP, shows they're aiming for responsible practices everywhere.
Okay, so sustainability is clearly a priority alongside the financials. Now, let's look ahead. The report had updates on key projects, future growth. Where do we start there?
Let's kick off with Canadian Malartic. That's a huge operation for them. They're making big strides moving from the open pit to underground with the Odyssey project.
How's that going?
Seems well. The ramp development at East Goldie, one of the main underground zones, hit the bottom of the first mining level in Q1.
Okay.
And they started digging out the mid-shaft loading station. Plus, they got a temporary service hoist running. So yeah, it looks like progress is on track for that crucial transition.
Sounds like things are moving along there.
Yeah.
I think I saw some exploration results mentioned too.
You did. They're still drilling and expanding East Goldie further east. And they've found a new zone called Eclipse.
Any good hits?
Yeah, some really encouraging ones, like 5.3 grams per ton gold over almost 27.5 meters down deep in East Goldie, and 6.6 grams over nearly 18 meters, also deep.
Those sound like pretty good grades.
Yeah,
especially for those widths.
They are. Generally, anything around 5 grams is considered pretty high grade. And in the new Eclipse zone, they hit 3.7 grams over almost 60 meters, so lots of potential being uncovered.
And they also bought another company nearby.
Right. They completed the acquisition of O3 Mining. That brings in the Marben deposit, which is close to Canadian Malartic.
Okay.
They've already budgeted $5.5 million for a big drilling program there this year. The idea is maybe Marben could be a satellite open pit feeding the Malartic mill.
So the whole Malartic area, the long-term vision, is pretty big then.
Yeah.
They mentioned potentially hitting 1 million ounces a year there eventually.
That's the goal for the 2030s, yeah. It includes Odyssey, maybe a second shaft there, plus developing the Wasamac project further east.
Lots going on.
And we also saw record quarterly production from the Odyssey South Zone, partly thanks to more automation. That's a trend to watch everywhere.
Definitely. What about Detour Lake, another huge asset for them?
At Detour, they're also pushing ahead with their own underground project. Temporary infrastructure construction is well underway.
Right.
They finished excavating the surface material for the exploration ramp entrance, and they just got the water permit in April, so actually digging the ramp should start like any day now.
Okay, good progress there too. Still exploring underground.
Oh yeah. Drilling continues to define the high-grade zones deeper down in the West Pit and West Extension areas. Again, some really impressive results reported.
Like what?
Well, one highlight was 8.0 grams per ton gold over nearly 80 meters. That's a fantastic intercept, down at about 521 meters depth in the West Pit.
Wow, 80 meters. That's significant.
Yeah.
It really seems like unlocking the underground is the strategy at both Malartic and Detour.
Exactly. And Detour's open pit actually hit a milestone this quarter, too, past 7 million ounces produced since it started.
Impressive.
Although, interestingly, Detour's Q1 production was a bit lower than usual, but record performance at their Macassa mine helped offset that.
Why was Detour lower?
They mentioned some weather issues and temporary problems with shovel availability. It just shows the benefit of having multiple mines, spreads the risk.
Good point. What about the other projects they're developing, Upper Beaver and Hope Bay? How are they looking?
At Upper Beaver, they finished the box cut for the exploration ramp. That's kind of the main entrance excavation.
Okay, first step done.
Yeah. And installing the steel for the headframe and building the hoist room are moving along. They expect to start digging the ramp and sinking the shaft in Q4 this year.
So later this year.
Right. And the final water treatment plant construction is also on track, should be done Q3. So, yeah, steady progress at Upper Beaver.
Okay, good. And what's the news from Hope Bay up in Nunavut?
At Hope Bay, they've prepped the site for the Nartok East exploration ramp at the Madrid deposit. And they've started digging that ramp, advanced about 203 meters in Q1.
So that's moving.
Yep. They've also started taking down the old mill there, suggests they're serious about building a new, potentially better processing circuit.
Makes sense. Exploration's still active.
Very active. They drilled almost 30,000 meters in the quarter, mostly around the Patch 7 and Saluk zones at Madrid.
Any highlights?
One interesting hit was 24.1 grams per ton gold over 9.5 meters, pretty high grade, and it was in the gap between Patch 7 and Saluk, which might mean those zones connect up.
Potentially bigger than they thought.
Could be. And one other sort of practical thing, they're extending a gravel track on site.
Okay. Why is that important?
Well, it should cut down on how much they need to use helicopters, which are super expensive up there, so lower costs, better logistics, smart move.
Yeah, that sounds like a practical way to save money in a remote spot. Finally, there's an update on the San Nicolas Copper Project.
Right. That's their 50-50 joint venture with Tech Resources down in Mexico. They expect to finish the feasibility study in the second half of 2025.
So later this year.
Yeah. And then, assuming the study looks good and they get permits, they'd likely make a decision on whether to build the mine. So that's a big potential future project, and it adds copper, diversifying beyond just gold.
Okay, so lots of potential future growth coming from these projects.
Yeah.
Now let's circle back to their Q1 performance. How did actual gold production and costs stack up against last year?
So total production was 873,794 ounces. That was down just slightly from Q1 last year, which was 878,652 ounces.
And why the small dip?
Mainly lower grades they encountered in the Barnett pit at Canadian Malartic as it winds down. But like we said, higher production from LaRonde and Macassa helped make up for most of it.
Gotcha. And what about costs? Always critical.
Costs were actually a bit better in some ways. Production costs per ounce decreased slightly to $879 from $892 last year.
Oh, interesting.
Total cash costs per ounce were basically flat, up just a tiny bit to $903 from $901. But importantly, that's well within their guidance for the full year, which is $915 to $965.
Okay. And the all-in sustaining costs, the AISC.
AISC also went down slightly in Q1 to $1,133 per ounce from $1,190 last year.
Good trend.
Yeah, although they do expect AISC to be a bit higher for the rest of the year, their full-year guidance there is still $1,250 to $1,300 per ounce. So costs seem pretty well managed, generally in line with expectations.
Okay. But what about the price they actually got for their gold? That must have helped a lot given where prices have
Oh, absolutely. This is a huge part of the story for their Q1 results. Their average realized gold price was $2,891 per ounce.
Wow. Compared to last year.
Last year, Q1 2024, it was $2,062 per ounce.
That's a massive difference. Over $800 an ounce higher.
Exactly. That huge jump in the selling price is, without a doubt, a major reason their financial performance was so strong this quarter.
Yeah, that really puts the record income into perspective.
Yeah.
Were there any other sort of notable items in the report we should mention?
Yeah, a couple things. They briefly touched on the U.S.-Canada tariffs. They don't expect much direct impact on revenue because of where they refine their gold,
Okay.
but they are keeping an eye on potential supply chain impacts, naturally.
Makes sense.
We already talked about the debt reduction and cash increase and how that influenced the Moody's outlook.
Right.
They also mentioned their hedging programs are still in place for currencies like the Canadian dollar, euro, Aussie dollar, Mexican peso, and also for diesel fuel, just managing volatility there.
Standard risk management.
Yep. And finally, just the details for the next dividend. Record date May 30th, payment date June 16th, 2025.
Okay. So let's try to wrap this up. If we boil down this deep dive on Agnico Eagle's Q1, what are the key takeaways?
I'd say very strong financials, record adjusted income, tons of free cash flow, making solid progress on their big future projects, especially underground at Malartic and Detour.
Right, the growth pipeline.
A continued demonstrated commitment to sustainability and a clear focus on shareholder returns, dividends, and those significant buybacks.
Okay, that covers it well. For you, what was the biggest, aha moment or the most striking thing in the report?
For me, it's really that combination of the huge free cash flow and getting so close to zero net debt.
Yeah, that stood out to me too.
It just speaks volumes about their financial discipline,
Mm.
especially with gold prices helping them out. And then you see them plowing money back into huge long-term projects like Odyssey and Marvin.
Right.
It paints a picture of a company that's not just doing really well now, but is also seriously setting itself up for growth down the road.
I totally agree. And for you listening, hopefully this deep dive gives you a solid grasp of what's happening with a major player in the gold world.
Yeah, whether you follow the materials sector, financial markets, or even just how companies are handling sustainability, understanding Agnico Eagle's strategy gives you some valuable context.
So maybe something to think about as we finish up. Consider the implications of these big investments Agnico's making,
Hmm.
especially in things like automation and all that exploration.
Hmm.
What could that mean for gold mining overall in the future? And for Agnico's ability to keep up this performance long term?
Yeah, and what other factors, maybe things we didn't even cover, could really swing things for them? Geopolitics, environmental regulations, technology breakthroughs.
Exactly. It's always that balancing act in these resource industries, isn't it?
Yeah.
Between making money now and investing for the future, all while navigating a super complex world.
It really is. Watching how companies like Agnico Eagle manage that balance, well, it's always pretty insightful.